What in the world is going on with GameStop, and will this happen to silver? Stick around and we'll discuss this topic. Hi everyone, I'm Chris, and thanks for tuning into our channel where we discuss achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest. GameStop has been all over the news lately, and I want to discuss what exactly is going on and how we're responding to this situation. GameStop is that company that we've probably all seen in strip malls across the United States. They are a brick and mortar business that sell video games. So GameStop is one of the most hated stocks by the Wall Street elite over the last several years, but it started to build some positive, bullish sentiment when Michael Burry invested in it. Most of us remember Michael Burry from the book and the movie The Big Short. He was the guy played by Christian Bale. He gained fame as being one of the first investors to short the housing market before the Great Recession. Michael Burry bought 3% of GameStop stock, and when asked about it, he said that the company possessed unlocked value. Another notable investor in GameStop was Ryan Cohen. He's the founder of a company called Chewy.com. He bought 13% of GameStop stock, and since then, the stock has been on a slow and steady rise. But in the last 2 weeks, the stock has gone from $17 per share to nearly $470. It started on the website Reddit with a Reddit subgroup called Wallstreetbets. Wallstreetbets is made up of approximately 6 million retail investors and traders who get on the website to discuss investing strategies, ideas, just topics related to investing and trading options. So they recognized that a perfect storm was brewing with GameStop. It was a small cap company. It was hated, and because of this, there was a huge percentage of the stock was held in short positions. So the group organized and engineered a short squeeze on GameStop stock. So what is a short squeeze? First things first, we need to understand what it means to short a stock. All right, so when you are bearish on a company and you think the stock price will go down, you can short the company's stock. Basically what that means is your broker will loan you shares of that company's stock, which will automatically be sold, and the money from that sale will be deposited into your account. But like any loan, you have to pay interest on the shares that you borrowed, and you have to repay those shares at a later date. If the stock price goes down, you can buy back the shares at a lower price, and you get to keep the difference between the price that they were sold at and the price that you bought them back to return them to the owner. Now, shorting a stock is very risky because unlike buying a stock where your risk is capped at the money that you've got invested, the risk of holding the short position is unlimited because at least theoretically, the stock price can go to infinity. And if that happens while you're holding the short position, you have to buy back the stock at that infinite price. This is a strategy that really needs to be left to the pros, and even they lose big from time to time. So that brings us to the short squeeze. So Wallstreetbets noticed that there were a lot of people holding short positions in GameStop, so they banded together and bought the stock in mass, which drove the price up, forcing those holding short positions to panic and to also buy back the stock that they owed. This continued to drive the price up further and further. This short squeeze resulted in hedge funds losing billions, and this is what caused GameStop stock to jump 2,500% in just a couple of weeks. But it is important to remember that this rapid price increase was not driven by fundamentals, and GameStop stock has since dropped about 75 to 80%, which caused people who jumped on the bandwagon late to get hammered. One hedge fund that held a short position and got caught in the short squeeze was Melvin Capital Management. They lost 53% of the fund's assets in the month of January alone. Now that is a cautionary tale about the risks of taking short positions in stocks. Now, this might appear to be some great rebellion against a corrupt few or a David versus Goliath battle between the haves and the have-nots. But in reality, it's never that clear cut. This was manipulation of markets so a few could get rich quick and many more would lose a fortune. I can assure you there were big institutional investors on both sides as well as small retail investors on both sides. Let's not think of this as anything more than it was. It's complete hysteria, a complete departure from the fundamentals, and the fundamentals should form the foundation of our investing strategy. So is the same thing going to happen to silver now that Wallstreetbets has its eye on the precious metal? Well, it may in some degree, but I don't believe at the same magnitude that it did with GameStop. There's no real shortage on silver. Silver isn't very volatile. And most importantly, you need holders of mass short positions for this to work. And there just aren't any in silver. So as far as silver going to the moon, don't hold your breath on this one. I just don't think it has the fuel required to get there. The short squeeze is nothing new, but with the increase in social media, the players have changed. We don't participate in these types of strategies. This is gambling at best, and at worst, market manipulation. So I do expect to see some investigations into this from the SEC. What those investigations find, we'll have to wait and find out. But what you can be assured of is a lot of people will lose a lot of money from this. Remember, investing is about understanding the investment, being able to put a fair value on it, and then buying it when it's on sale at an attractive price. We continue to look for these types of investments because these are the types of investments that have worked for us, and they've worked for so many of the most successful investors in history. This kind of crazy hysteria often occurs at the late stage of a market bubble when you have a complete departure away from fundamentals. 3 weeks ago, Tesla CEO Elon Musk tweeted a 2-word tweet: buy Signal. This shot Signal Advance Incorporated stock up 5,100% in a 3-day trading period. The only problem? This was the wrong signal. He was referring to a not-for-profit organization that had came up with an alternative to WhatsApp, not a small technology company based in rural Texas. Signal Advance's stock has since crashed 90% from the high that it reached during this all-out pandemonium. Remember, investing is about understanding the fundamentals of the investment, putting a fair value on it, and buying it at a discount. Don't get caught up in the hype and the hysteria. Thank you so much for watching. If you found the information in this video useful, please let us know by hitting the like button, or better yet, subscribe to our channel. And as always, please feel free to leave a comment if you have any questions or you have any topics that you'd like us to discuss in future videos. Remember, earn more, spend less, and invest the rest. And we'll see you next time.